Hello and welcome once again to the Smart Money, Dumb Money Show, and I am your host as usual, Keith Richards. I am President and Chief Portfolio Manager at ValueTrend Wealth Management, and today we're going to talk about the Loony. I don't mean insane people, what I mean is the Canadian dollar. And we're going to take a look at a chart of the Loony that if any of you follow my blog regularly, which is at valuetrend.ca, and you'll see I run a regular blog usually twice a week. It's much more detailed than these videos are often capable of being, so I do encourage you to read the blog if you don't already. But whatever the case, on the blog I have often posted this chart of the Canadian dollar. And so some of you will recognize it and will have seen the support and resistance lines that I've drawn in the past. I'm going to pull it up right now, and then I just want to make a couple of notations. And that is that I started drawing this chart literally back in 2009. And I noted that at that time, there was a level of support for the Loony around the high 70s, around 78. And in fact, it bounced it off 2009. And you can see my line goes back further because there had been a support level present. And of course, as you guys may know, that support often becomes resistance, and that is in fact what happened. So the Loony went on, as many of you know, and reached these super high heights. Do you remember when you can go to the US and buy something for par? Well, that was there's a couple of times just before the 08 crash and just around the 2011, 2012, 13 period, where our Loony was quite high. Of course, all this is reflected because at the time, at least in this period, oil was very, very high. And oil is a very important product for Canada. And you know that I've often pointed out that the current Canadian government just seems to be pretty darn clueless on that when 30% of your GDP is relying on one segment and you want to crush that segment. But that's not the topic for today, although it does enter into it because we are very reliant on the pricing and the profitability of our companies to sell that priced oil. So let's take a look at the pattern after that 78 cents or so lost its status as being a point of support. And you can see it did, after it fell, the Loony fell quite a bit from around par with the US dollar. It did find support for a while at 78 once again, but this time it went through. Now, since that point, realistically, the Loony has been struggling more often than not with an ultimate peak around 83, but more often than not between 72 and 78. Lately, it's been stuck between 72 and 76. As you can see, I've annotated on today's chart. So the question a lot of people have is, will we be seeing the Loony go back up again from this juncture? Well, I will say that all depends again on at least one factor being the price of oil. Now, again, we don't have a very cooperative government, so the profitability of our oil producers on oil is not as good as it used to be when you have a government that's fighting you. Just ask Daniel Smith in Alberta, who's in the province that makes most of our oil. So with that in mind, I think there's one factor that's going to affect the Loony from maybe ever reaching lofty heights again, unless we get a different government. But at the same time, it is trapped between 72 and 76. And the question is, if this 72 zone does disintegrate on us, then we could see the Loony getting much lower, down into the 78 cents area. And in fact, I have another chart, I believe, of the Loony, and that is, actually, I don't have another chart. I'm just going to pull up a weekly chart or a shorter term chart. Let's say shorten the length here from 20 years to maybe something like 5 years, just to take a little bit closer look. And if you look, the Loony did temporarily punch through into that 72 cent area, which is where it has been very weakly supported, but it has been supported before. So you can see how important the 72-cent area is for the Looney. Now we are getting a little bit of a spike right now. Will it return to 76? Again, we're going to have to take a look at the US dollar, and we're going to have to take a look at the price of oil to make any observations there. So with that in mind, I am going to take a look at the price of oil, and this is not the one I want to look at because that's a historic look. So this is sort of a long-term look, just like we were looking at the Looney there, a long-term look at oil. And I do like oil because it did punch through an old level of resistance, which was around $65 a barrel. And you've seen the spikes just as much as I have. This is going back, if we look here to 2021, and you'll remember when transient inflation became recognized as not so transient, and oil went up quite a bit. And since then, it's kind of settled in between 65 and 85. It's about halfway between that range right now. I think it's, if you look on this right here, it says $73 a barrel. So it's halfway between. I can't really give you any direction in the very near term because it's really not giving us much guidance. So we really should be looking at seasonality, which by the way is strongest from February and on. That's your very best time to own oil. So it may continue to monitor a sort of 65 to 85 range for a while, and eventually possibly get to that top of the range, 85, and maybe even higher. My belief has been, based on longer term stagflation and longer term commodity cycles, that we will eventually see that 110 again, which we had been seeing during the last oil boom of 2011 to 2015. So I think we're going to see that again, but I won't predict when. I do think that that's a probability, and that would push the Looney up. But in the meantime, oil is rather just sort of lounging around, you could say. So one other thing we should look at is the US dollar. And so if we look at where the US dollar is, it's not, I guess this is a fairly long chart. You can see there was some resistance here. I didn't draw a line, so I'll just draw some crosshairs here. And you can see that resistance became support. And that was around, again, 100 cents on the world market. So just to understand, this is not against the Canadian Looney. This is against a basket of currencies against the dollar. And you can see it's been hanging out around 100 or so on that scale. This is 100.90, in other words, about 101, but let's call it 100 on this scale. And it is again finding support there. It's bounced, as you can see, many times since 2022, even into 21, off of that level, which was a major resistance level. So I don't really see the US dollar doing much. There's a potential that it gets to the higher range here, which would be around 105. Okay, from currently around 103, it could get there. That's a couple of cents, which by the way works against the Looney. When the US dollar rises against world currencies, you're working against the Looney, because that means the US dollar strengthening on an overall basis. So I guess my comments on all this is that actually I'm going to bring you back to one more thing, and that is the seasonals for oil. So, or for the dollar, I should say. So the Canadian dollar does tend to have a flat period and then can move up into the end of the summer, which we're kind of coming to the end right now. I'm recording this on the 7th of August. So you can see by the end of August and into September, it can often have a spike before it kind of gets hammered into February. And remember, I mentioned that oil, great time to buy oil is around February, because after February, the market moves up on oil quite a bit. So too does the Looney. So keep that in mind. We could see a little spike on the Looney in the next month or two from the date of my recording this. But long and short of it is that the Looney's rather trapped in a range right now. It probably isn't going to break that 72. It tried recently and it did not break it. So my thoughts are that the Looney will probably be okay for the summer. And as far as us snowbirds are concerned, who maybe need to convert some money, maybe we won't get much opportunity to buy better priced Canadian dollars until well into the winter. if there is any kind of a spike over September, October, like the seasonal chart implies, and remember, seasonals are not absolutes, they're just tendencies. So if we do get a little bit of a spike on the Looney back to say 73 or something, 74, I think I personally will be converting at that time. So that's a short-term view because I do go to Florida usually in January. So I hope that that helps you as far as assessing where the Looney might go. I think as far as investing in US securities, there's probably not a lot of reason to hedge. So if you are buying, say, an ETF and it offers you a hedged dollar version, I wouldn't bother because you probably actually see some strength or flatness on the US dollar against the Looney. I don't think the Looney is going to move up a lot, even if it does spike briefly in the fall. I think we're really going to see some potential maybe into the spring, which is when oil usually moves up anyways. And this, of course, assumes world prices do cooperate with that seasonal trend on oil. That would help us. Like I said, we don't have a very cooperative government here, so that can curtail our Looney a bit, but still, we'll still make money. Our producers will still make money in that environment, and that should help the Looney. So bottom line, it's mid-August right now, maybe a short spike on the Looney. Thereafter, maybe nothing until midwinter of 2025, and that might be the time we could actually see the Looney take a new run. And I do ultimately think oil has that potential to go higher. It just probably isn't going to happen overnight. So thanks for your time watching this, and we'll be back next week with another video.